I'm Alan Kenny, Editorial Director with REIT.com, and we're in New York at the Waldorf Astoria Hotel for REITWeek 2016, NAREIT's Investor Forum. I'm joined by Lukas Hartwich, Senior Analyst with Green Street Advisors. So, Lukas, it seems as though hotel fundamentals have been lagging recently. What do you think's driving that?
It's a great question. I think there are a few different factors that are driving it, but if I had to single out one factor that's probably carrying more weight than the others, it's just that business travel and business spending has been weak, and that makes a lot of sense if you look at corporate profitability. That part of the business has definitely been weak. If you look at what the drivers of that have been, it's a strong U.S. dollar, which is hurting U.S. corporations' profitability overseas, as well as reducing demand for U.S.-made goods. And then as well, if you look at the commodities industry, oil and just commodities in general, those sectors have definitely been hit pretty hard given the drop in commodity prices. So those factors combined have been a significant drag on hotel fundamentals, especially for the REITs, because 75% roughly of their demand comes from business travel.
Tell me a little bit about the lodging demand indicator.
Yeah, I'm glad you asked. So a couple months ago, Green Street unveiled a tool called the Lodging Demand Indicator. And really what we wanted to do with this tool was to create a tool that would help us predict the ups and downs of lodging demand going forward. And so what we did is we found a few leading economic indicators that actually do a really good job of leading hotel demand as well. And we combine them to create this tool. And right now it's interesting. The tool is on the good side. It's not calling for a downturn, which is very much front of mind for investors today. But the bad news is it's calling for some of the weakest growth we've seen over the last 20 years outside of a recession.
So we've talked a little bit about fundamentals. Tell me, how's that translating into asset prices for hotels right now?
Yeah, it's kind of the million-dollar question in the hotel sector these days. Nobody really knows where values are. Transaction activity has slowed down quite considerably in recent months. And so I was just at the NYU Hotel Conference earlier this week, and if I were to poll, I guess, most of the people I talked to, I would say that the consensus view is that hotel values are down anywhere from 5 to 15%. And if you look at the types of hotels, generally the higher end hotels in gateway cities are at the lower end of that, so maybe a 0 to 5% decline. And then hotels, maybe of older hotels in non-core markets, are at the higher end of that range.
So then how are hotel REITs reacting to all this?
Yeah, it's a great question. So Green Street, we like to really focus in on the levers that management teams can really pull to create value for shareholders, and one of those levers is capital allocation and what to do on that front. And right now there's a very strong signal for hotel REITs to be selling assets and either paying down debt or buying back their shares, because they have this unique arbitrage opportunity. They trade at significant discounts to the net asset value of their portfolios. And so they can go out and sell assets in the private market for 100 cents on the dollar and use those proceeds to repurchase similar assets in their own portfolio at a discount to NAV by buying back their stock.
Always a pleasure, Lukas. Thanks for joining us.
Yeah, thanks for having me.
For more from REITweek 2016 and other REIT news and analysis, be sure to visit REIT.com.